When you walk past a massive construction site, the cranes and the concrete, they look entirely permanent.
Yeah, they really do.
Right. But if you're the one holding the clipboard, whether you're an aspiring general contractor or you're looking to hire one, or maybe you're just insanely curious about how risk actually works in the real world, you know the truth.
Which is that it's all incredibly fragile.
Exactly. That entire site is actually hanging by this invisible thread made of paper, contracts, and, well, heavily calculated risks.
Lots of risks.
So many. And today, we have a quick reference document from Client's Choice Insurance, and it details 12 critical coverages for Colorado general contractors.
A great breakdown.
It is. So our mission for this exploration into the source material is to take you inside that massive, complex web of risk to see how the invisible safety net of the building world actually functions. Okay, let's unpack this, starting with the flesh, blood, and steel.
The physical dangers on a live site, yeah. They're very visceral.
Right. We're looking at OSHA's Fatal Four, which are falls, being struck by objects, getting caught in machinery, and electrocution.
And those alone, they cause nearly 60% of all construction fatalities nationally.
60%. That is wild.
It is. And the baseline fatality rate in construction, it sits at 9.6 deaths per 100,000 full-time workers.
Wow.
Which is, it's nearly 3 times the all-industry average.
Jeez.
And that staggering frequency is exactly why workers' compensation is a strict, non-negotiable legal requirement in Colorado.
Yeah.
To cover medical costs and lost wages for a GC's own employees.
Right, of course. But the document also points out that Colorado brings its own unique flavor to those job site hazards.
Definitely. The altitude.
Yeah. It mentions an elevated risk for fatigue-related falls at high-altitude job sites. Why does elevation change the math on just a standard scaffolding fall?
Well, it really comes down to basic physiology. Working at, say, 8,000 or 10,000 feet means less oxygen per breath.
Right, the air is thin.
Exactly. And that oxygen depletion accelerates muscle fatigue, and this is the scary part. It critically slows your cognitive reaction times.
Oh, wow.
Yeah. So a worker who trips at sea level, they might catch themselves.
Grab a railing or something.
Right. But at 10,000 feet, that split-second delay in reaction time turns a stumble into a fatal fall. It completely changes the risk profile.
That is terrifying.
It is. And then you have to add in the transit risks. GCs run these large fleets of vehicles, shuttling crews and materials across steep mountain passes.
Oh, like I-70 in the winter?
Exactly. Or even just packed city interstates.
Yeah.
And that requires commercial auto insurance with limits regularly exceeding $1 million.
Okay, wait. I have a question about this. If the subcontractors on these sites are required to carry their own insurance anyway, why is the GC forced to carry $1 to $2 million in general liability? Aren't the subs already covering their own messes?
What's fascinating here is a legal mechanism called vicarious liability.
Vicarious liability. Okay.
Right. So it basically means the GC isn't just an air traffic controller telling the planes where to go legally. They own the airspace.
Oh, I see.
Yeah, so if a subcontractor's excavator, accidentally destroys a neighbor's property, the injured party doesn't just sue the pilot of the excavator.
They sue the airport.
Exactly. They sue the airport. So general liability, or GL, is the GC's shield against those third-party bodily injuries and property damages.
Okay, so vicarious liability means a GC can manage the human risk on the ground by strictly policing their subs.
Right.
But, building in Colorado during the spring is like setting up a multi-million-dollar house of cards outdoors. No amount of supervision stops a $2 billion hailstorm in Denver.
That is very true.
So how does a GC insure against something they literally cannot control? Because this guide highlights that Colorado logged $521 million in reported hail claims in 2024 alone.
That's a massive number.
And historically, hail has caused $38 billion weather disasters in the state since 1980. So if severe hail is basically a guaranteed event in a Colorado spring, shouldn't standard general liability just cover a shattered timber frame or maybe an accidental asbestos release during a demolition?
This raises an important question about how the insurance industry mathematically categorizes risk, because there is a very hard line here.
Okay, what is it?
General liability is strictly designed to cover damage you do to others. It does not cover your own work product.
Wait, really?
Yeah. If Mother Nature batters your staged materials with hail, standard GL does absolutely nothing.
Oh, wow. I assumed it was just a blanket policy.
No, not at all. You have to carry builder's risk insurance to protect the project itself and commercial property insurance for your own equipment yards.
Right, okay. And what about the asbestos release I mentioned?
So standard GL completely excludes pollution.
Completely?
entirely. Pollution risks, like a demolition crew hitting hidden asbestos in a pre-1980 building, those are mathematically unquantifiable for standard underwriting pools.
Because you don't know how far it spreads.
Exactly. The potential cleanup costs and third-party health claims are just too vast and unpredictable to bundle into a standard liability policy.
That makes sense.
So that requires a hyper-specific contractor's pollution liability policy. Otherwise, the GC is paying for that hazmat cleanup straight out of pocket.
Yikes. Okay, but even if the weather holds, the asbestos stays contained and nobody gets hurt on site, a GC's risk isn't over when they hand over the keys, is it?
Not even close.
Because the exposure extends backward to the financial health of the subs they hire and forward into the future. Like, if a hired subcontractor goes bankrupt mid-project, the GC is financially on the hook to rebid and replace them while the schedule slips, right?
Which is exactly why Colorado requires performance and payment bonds on public contracts over $50,000.
Oh, okay.
Yeah, and Denver actually requires its own $50,000 contractor bond independently.
Just to work in the city.
Just to be licensed there, yeah. And larger firms, they'll use subcontractor default insurance, or SDI, to absorb the shock of a sub just walking off the job.
That's smart.
It is. And then, to protect against a catastrophic subcontractor error that bankrupts those primary policies, GCs carry commercial umbrella policies.
Like an extra layer of protection.
Exactly. Usually of $5 to $10 million on bigger commercial projects.
So what does this all mean for the finished building? Because GCs also carry completed operations coverage and contractors' errors and omissions, or E&O for design build judgment calls.
Right, like specifying the wrong structural system for Colorado's heavy snow loads.
Yeah, exactly. So let me get this straight. If a framing sub does a terrible job, goes out of business, and then, like, 18 months later, a roof collapses under a snow load, is the GC really the one holding the bag?
If we connect this to the bigger picture of Colorado law, the GC absolutely holds the bag. Yeah. Under the Colorado Construction Defect Action Reform Act, which the industry calls CDARA claims for completed operations, can be brought up to 2 years after a defect is discovered.
Okay, 2 years doesn't sound too bad.
Well, wait, it's up to 6 to 8 years after substantial completion.
Oh, wow. 8 years.
Yeah. As the party of record, the GC remains the first-named defendant, regardless of which sub drove the faulty nails. The whole legal structure ensures the GC remains responsible long after the paint dries.
A decade of holding your breath on a project you finished years ago. That's a lot of stress.
It really is.
But let's look at the daily grind. We're also talking about everyday internal housekeeping risks. Because the guide mentions coverage for stolen tools and equipment, which is a massive issue when construction theft drains, what, $300 million to $1 billion nationally every year?
Yeah, it's a huge problem, especially heavy equipment.
Right. But it specifically calls this inland marine coverage. Why does the insurance world call coverage for a stolen skid steer sitting in a dirt lot in landlocked Colorado inland marine?
I love this one. It's actually a fascinating historical leftover.
Oh, really?
Yeah. Centuries ago, insurance was primarily written for ocean freight, right? So marine insurance.
Ah, okay.
And when goods started moving inland via canals and then trains and eventually trucks, the insurers didn't really want to invent a whole new category. They just adapted the term.
That is so lazy, but so funny.
It is. So today, inland marine is just the industry jargon for property that is mobile or transported.
Yeah.
Like a contractor's bulldozer that moves from site to site.
Okay, that makes so much sense now. But here's where it gets really interesting, because I see a huge irony with these internal risks.
Oh, how's that?
Well, the guide also mentions employment practices liability, or EPLI, which covers things like wrongful termination or discrimination claims from the GC's own staff.
Right, like an age discrimination EEOC complaint.
Exactly. And the average EPLI settlement runs between $27,000 and $54,000. Yet only about 1 in 5 smaller construction firms carry it.
That's the crazy part.
Right, because we just talked about multi-million-dollar umbrella policies and $2 billion hailstorms. Why should a GC, or anyone listening, sweat over a $27,000 employment settlement or a stolen generator?
It really comes down to the mechanism of probability. Look at it this way. A $2 billion storm is a severity event.
Okay.
It is catastrophic, yes, but relatively rare for any single specific job site on a given day.
Right, it doesn't happen every Tuesday.
Exactly. But equipment theft and employee disputes, those are frequency events.
Yeah.
They scale directly with headcount and multi-site operations. While a GC might never experience a massive roof collapse in their entire career, they will almost certainly deal with stolen tools or a disgruntled former employee filing an EEOC complaint.
Yeah, that just comes with running a business.
Exactly. Those are highly probable routine drains that bleed a company's profit margins quietly every single day.
That puts it in perfect perspective. General contractors aren't just builders. I mean, they really are elite risk managers.
They have to be.
Yeah. They navigate oxygen-deprived falls, billion-dollar hailstorms, and a web of subcontractor liability that lasts for nearly a decade, all while trying to protect their daily margins from missing tools and internal disputes.
It is definitely not a job for the faint of heart.
No kidding. Which leaves you, our listener, with one final thought to ponder on your own. Since a general contractor's financial survival relies so heavily on the unpredictable actions of subcontractors and, obviously, highly volatile weather, how might the rapid advancement of AI predictive weather modeling and automated job site surveillance shift the entire financial structure of construction insurance in the near future?
That's a great question. The tech is moving so fast.
Right. Could that invisible safety net become completely digitized? It's something to think about. Thank you for joining us on this exploration today. Next time you walk past a construction site, you'll know exactly how much invisible tension is holding all that steel in the air.